What up, people? Happy Saturday. Welcome to Wealthy Conversations. I'm Kamari Ellis, the Finance Rebel, and this is the segment of the Finance Rebel show that we do every Saturday. Every Saturday, we have a conversation geared towards helping us get our wealth game up, get our wealth education up, get our wealth language up, get our wealth mindset together so we can go out in the next week and tackle some things and hopefully progress forward. Do me a favor, though. I know a lot of y'all rock with me every week, so go ahead and share this out with somebody. Share this with somebody who's looking to better understand money, understand finance, because y'all know I try to make it simple, easy, and fun, simple, easy, and plain. So let's go ahead and get busy. All right, so today we are talking about 10 dividend stocks for financial freedom, 10 dividend stocks for retirement, whichever way you want to call it. But again, do me a favor, share this out. I even forgot to share it out with some of my people, but it's all good. It's all good. They'll get it if they want it. They will get it if they want it. But hello. Everybody come in to y'all salutations. Y'all know black folks. We gotta come in and we gotta speak. Mama made sure we did that. But there's a lot going on. A lot going on that we're going to talk about. We're definitely going to talk about these dividends, talk about stock, particularly GameStop. I don't know if anybody saw, but there was a earnings report this week. Very, very interesting. But people still seem to love it. But we'll definitely get into that as well. I'm trying to share this out, but it's not working with me. It's not being my friend. I should have did this earlier. Let's see. By the way, shout out to Netter Gold. I got on my Netter Gold t-shirt or sweatshirt. It's probably the last day for hoodie/sweater season. And I also have on my nerd cap. I call this my thinking cap from Fab Nerd as well. So two of my favorite black-owned companies. So I think I'm going to have to call it quits. I can't share it out. If somebody's watching, do me a favor, share it out and tag me on it on my personal page. But let's get the party started. I don't want anybody waiting on me. But before we get started, let me just say my hellos. Tara's here. How are you, Tara? Kurt Jamaican, how are you? Go see P&G. Hey, man, how you been? You ain't been there for a while. Glad to see you. Tiffany, how you doing, Tiffany? Don Johnson. All right, the party is officially started. DJ Don Johnson's in the building, y'all. Hey, Felicia, how are you? And Adrian, what's up, hey? How are you? All right, so I know we got Taid here. Evelyn's here. Who else is here on my IG? E. James C., how are you? Black Private Banking. I like that name. That's strong. Medicine and Mortgages. Hey, Elizabeth, how you doing? Welcome. All right, so let's go ahead and get this party started, y'all. So today's topic is going to be 10 dividend stocks for your retirement or for your financial freedom. Many of y'all know I don't ever really plan to retire, but I do plan to be financially free. That's what I'm working on now. That's my goal. But retirement, financial freedom, they have very, very similar characteristics. Typically, though, many people who are working towards retirement, like folks in the retirement or the FIRE community, they're trying to get it sooner than later. And I'm not mad at that at all. I'm not mad at that at one bit. All right, so listen, market rundown. S&P 500 closed 39.74. All right, it was up 1.57% this week for the year to date. It's also the quarter to date because the quarter is closing as well. It's closing at 5.82%. So almost 6% for the first quarter of 2021. We're almost up 6% year to date as well because first quarter, everything's the same. Now, when we get to the second quarter, your quarter to dates will change. Your year to dates will change. It'll be a different thing. All right. Oil closed at $60.72. So $60.72 per barrel of oil up. Price of oil was up 3.3% this week. All right, so oil's moving. So y'all probably seeing gas prices with everything that's going on from the freeze over on Texas. Many of the refineries closing down. That just makes it harder for the price of gas. And then now we're seeing the blockage over in Suez. All right, but oil's up 24.86% year to date, roughly 25% year to date. Oil's up. Gold is up. Well, excuse me. No, gold is down. Gold is down. All right, so gold closed at 1731, $1,731. All right, gold closed at flat for the week, but gold is down 9.9 percentage points year to date. So we're seeing some things starting to rotate in the economy. We're seeing treasury prices drop because interest rates are going up, which is bad for the real estate market to a certain degree, right? We're still at all-time lows, historically speaking. Some people don't like it. When I say all-time lows, I'm talking about mortgage rates, 30-year mortgage rates to be particular. So, but we're seeing that number start to creep up, so many people are starting to worry. Now, this is a little aside here. I saw a post on Instagram. Somebody shared it. I can't remember who, but it said that there are more realtors than there is actual inventory, right? There's more realtors than there's actually homes to be sold in the nation. That's a key. That's a sign to me. And I know it's been like that because everybody thinks being a realtor is super duper easy when it's not, especially when you run into those people that are home shopping but really don't have a real clue or real handle on what they want to buy, where they want to live. And then so they'll go out and see every listing, every open house. They'll drive their realtors all around town. And, sometimes people see, oh, well, the realtors get about anywhere from 3 to 6% in terms of their commission. But nobody ever factors in the cost of driving around with people, visiting people, some of the marketing costs. It's work. It's work. So I would say we're going to start seeing some changes in real estate soon. I'm not telling anybody to run for the hills, but I'm just saying that anytime you see some market changes, you see those kind of fly by night people, the people that jump on the bandwagon come in, they get shaken out. They're not ready for it. They don't understand that nothing lasts forever in terms of being up in a way, in terms of a positive trend. And all the people that are really serious about real estate and being a realtor, they will survive and they will be able to weather the storm. Now, they might have some pain in the interim, right? Sales might slow down because a lot of the markets are on fire. I'm in Philly. The Philadelphia real estate market is on fire. It's crazy. But I think some shaking will come relatively soon. All right. See, a few more people have joined. Landlords, MEF, how are you? Basically none. How are you? All righty. Jose is in the building. All right, how you doing, Jose? Angela, how you doing? Hey, Cheryl. Shot Hill. Yep, there's more buyers than homes as well. Yeah, but I got you. There are more buyers than homes. So we'll probably see some more home building, but again, it's going to be interesting. It's going to be interesting. So we'll see. But listen, as we get going, right? As we get going, again, we are talking about 10 dividend stocks to build your retirement with. And today I put a post out this morning on my IG. Let me see if I can find it real quick. But basically asking or basically showing that I got paid dividend because, I shared some of that stuff with y'all. But basically putting out that I got a dividend payment. And on my dividend payment, I said, should I keep it? I mean, should I spend it or should I reinvest? So I'm going to ask you all the same question, but let me show you the post real quick. And I can tell you what I got a dividend on this morning. Where is it at, though? Oh, there it is. Gotta find it. So give me 1 second, everybody. me show y'all this real quick. Put it on my IG. I think it went over to my Facebook as well. So, all right, so I got a dividend, $4.16. Some of y'all might say, oh, that's chump change. That's nothing. Listen, it might be nothing to you, but I get that 4 times a year. And the more stock or the more shares I own, the more I get. All right, so I want y'all to think about compound growth. What is compound growth? Basically, when you invest in something, and let's say you invest $100. And matter of fact, let's say I invested $100 into this ETF. Now, this is the Spiders Select Sector Energy Fund, ticker symbol XLF. That is not a recommendation to buy or sell this ETF. I'm just sharing with you what I'm going through. All right. So, excuse me. Let's say I invested $100 into this and I got $104. I got $4.16 in terms of a dividend. So now my $100 has now grown by 4% to $104. All right. I can either keep that in cash or I can reinvest. I would rather reinvest because then the next time I get a dividend, it will reflect that reinvestment. Might be small, might be meager, but if I keep doing that over and over and over again, it will grow. And so I could start with, let's say, $100 investment. And if I don't put any more money in my personal money out of my bank account, out of my pocket into this investment, it will grow, right? Because you see this, I got a dividend. It will grow. And then again, I can keep reinvesting it. Or again, I can keep the cash. Now, you employ the power of compounding when you reinvest it, if you believe it's a good investment. So then, again, so now at 104, now my investment base is not $100 anymore. It's now 104. So then again, my dividends will grow. And then let's say I just get another $4 just for example's sake, right? Then I will have $108. Next quarter, it'll be $112. Next quarter, it'll be $116. Now that's assuming and using a flat dividend. The dividend will also grow as I reinvest. So listen, dividend reinvestment is very, very powerful. But the question I asked was, should I reinvest or should I buy a cup of coffee? All right, my new divvy package. That's what we calling these. This is the divvy package. Everybody talking about the stimmy package. I'm calling my dividends the divvy package. All right, because I think divvies are better than stimmies. Don't anybody steal that. If y'all steal it, give me credit. All right, that's kind of fly. So I need my divvy package. So as I build up my divvy package, my monthly income, I thought it was really, really cool this morning when I walked downstairs and I saw my Barron's newspaper. Yes, I still read Barron's. I still read paper. I'm old. Don't hate on me. There's something about it. And yes, I can get it online. But today's cover was this. It was, yes, you can retire on dividends, right? So I'm a real big fan of dividends because, again, it's another income stream. And at some point, once you grow your dividends, your dividend portfolio, right? We could turn the dividends off or the reinvestment off, and then we can use it as income. A lot of people do that in retirement. It's a great strategy. It's a great way of, again, building up an extra income stream. I tell everybody, we talk about passive income. Most people talk about passive income incorrectly. However, the best passive income is dividend stocks. No work. A lot of times we talk about passive income from real estate or real estate ownership. That's not passive. Usually, there's usually some work involved. And for all my real estate folks, I'm not hating. I'm just saying, y'all like to label me a hater, but y'all always forget that I did used to manage about 50 doors. So I know a couple things. All right. So that's what I wanted to talk about today. Went through this Barron's article, and Barron's laid out about 10 stocks that I thought were really, really interesting. Some of them I own. Some of them I'm building a position in, so I can build my divvy package. All right. And so I wanted to just kind of go through this and go through some of the stuff that I thought was really interesting. Again, what is a dividend? Right? What is a dividend? By the way, I see a lot of people are chiming into the chat. So the question is, should I reinvest the dividend or should I buy a cup of coffee? I think everybody already knows what I'm doing, but listen, let's have a little fun. All right, let's have a little fun. But what is a dividend? A dividend is money that's paid out from a company, money that's paid out from a company's profits, usually. All right. When you have these stock corporations, the board will get together, a group of people will get on a conference call because nobody's meeting in person these days. They'll get on a conference call and they say, hey, should we issue a dividend? And then they go through their process of either voting or making their decisions because dividend isn't guaranteed. Companies can say, no, we're no longer going to distribute a dividend to our investors because it might not be a good idea. By the way, shout out to Jose. I think Jose's here. He corrected me last week when I was talking about dividend stocks in terms of Disney. Or maybe it was a couple weeks ago. I saw the clip. It just made me think about it. I don't know if I acknowledge you, but shout out to you, Jose, for letting me know that, yes, Disney did indeed suspend their dividend. All right. Disney suspended their dividend. Ford has suspended their dividend. There's many other companies out there that have suspended their dividend throughout this whole pandemic and COVID situation. That is understandable because it's better to keep the money in the house so they can continue to invest, keep people paid, keep suppliers happy, and basically keep the business afloat. So I get it. I get it. All right. But, in this context, that's why I brought it up because, again, companies don't always have to distribute dividends. I've seen some people get mad when a company discontinued dividends. Well, if it was a good company when they were running the dividend, more than likely it'll be a good company after whatever pandemic or whatever issue was transpiring was going on. All right. So I just want you all to keep that in focus. All right. So here I want to share something else with you, right? So I want to share the stocks that were listed in this article before we get too much further. All right, so the stocks that were in there were AT&T, Coca-Cola, Consolidated Edison, or Con Ed for my New York folk, IBM, Johnson & Johnson or J&J, Kellogg's, Procter & Gamble or P&G, SL Green Realty Corp, U.S. Bancorp, and Verizon. So are any of y'all familiar with any of those? A lot of these are dividend aristocrats. And I did a session on dividend or doing dividend research a couple episodes ago too. Y'all got to go back and check my catalog, man. I'll be dropping some gems on y'all. I don't know if y'all really recognize. But AT&T, I do own a bit of AT&T. I'm building up a position in AT&T now because I want my divvy package to grow. All right. So Coca-Cola, everybody loves Coca-Cola, was hit a little bit or hit a lot because Coke sells over 1 billion Cokes around the world, right? Actually, many people feel that it might be the number one brand around the world. Okay. Again, Consolidated Edison or Con Ed for my New York folks is a utility stock. Now, utility stocks are notorious for paying dividends, but usually their dividends aren't that great. Okay, again, IBM. IBM is, a lot of people like IBM, but or been around for IBM. A lot of people kind of sleep on IBM because IBM isn't really that sexy. Johnson & Johnson. Oops, didn't mean to click that, but we'll go back to that. Johnson & Johnson, again, pharmaceutical company and / beauty company, has a lot of brands, make a lot of money, has great cash flow. A lot of people know about them. All right, Kellogg's. Anybody that owns cereal or likes cereal, they manufacture a lot of cereal. They also have Morningstar brand as well. Procter & Gamble or P&G, another powerhouse company as well. And they have so many billion-dollar brands, it's ridiculous. Johnson & Johnson does as well, but I think Procter & Gamble may have them beat a little bit. SL Green Realty Corp is a REIT, and we talked about REITs not too long ago. All right, REIT. REIT stands for Real Estate Investment Trust. Real Estate Investment Trust. And so these are companies that primarily invest in real estate. Everybody thinks you can only get into real estate by buying the actual bricks and mortar, but you can also get into REITs or real estate through the stock market without the hassle of somebody calling you in the middle of the night saying, hey, I flushed my pantyhose down the toilet and now it's clogged. But I don't even know if people wear pantyhose anymore. All right. So in US Bancorp, another bank that does a lot of wealth management and a lot of other things around banking for high net worth individuals. Last but not least is Verizon. Verizon. So, again, we have two telecommunications companies on here, mobile companies. There's a reason why they're there. They both pay heavy dividends, right? They make massive amounts of money. And so it's interesting that you have two of those on there. So those are the stocks that we are going to go through. So I want y'all to take a quick minute, look those up. All right, get y'all pens, get y'all pencils out, and we're going to go through them. Now, there's a couple things I wanted to talk about real quick as you all are getting your pen and pad, getting your paper. Want to say what's up to some people. Kiana is here. How are you? Test for Peace is here. How are you? Guys and investors here. Lock and Keys here. Gloria's here. Welcome. And I think a few other people have joined as well. Ernest Palmer, how are you? Let's see. I think we got, so Cheryl, all right. So Cheryl's on the ball. She said it before I even said it. She said she's getting a pen. All right, cool. And Shai says, it's a seller's market. The sellers are getting a bit nasty about these sales. Your realtors must know how to write competitive offers. Yeah. And a lot of them are still trying to lowball everybody and play games and trying to play super duper negotiator. There's too many bids out in the market for that. If you really want the property, folks ain't playing no games. All right. So Ernest says reinvest. So again, the question is with my $4 dividend payment, do I reinvest or should I buy a cup of coffee? So don't forget that, y'all. I want to see what y'all think. Let's see. Anybody else join us? When they do that, do you get the money back on the missed months? I'm not sure what you mean by that. Expound on that. All right. Jose says top 5 KO's product lines are Coke Classic, Diet Coke, Dr. Pepper, Sprite, Fanta. Yep. But it's all soda, right? And for the record, I'm biased. I'm not a big soda drinker, even though during tax season, I've been getting these sugar cravings, which aren't bad, but it happens every tax season because folks be stressing me out, but it's all good. All right, Don Johnson says, because companies can cut their dividends, do you think investing in high dividend ETF is a better way of going? VYM is a staple in my dividend portfolio. I mean, so there's nothing wrong with that, right? But we always have to remember, I'm hoping to give more context and some lessons here. But what is an ETF, an exchange traded fund, for all those who don't know? All right. And basically, an ETF is a basket of stocks. It can be a basket of tech stocks. It can be a basket of defense stocks. It can be a basket of bank stocks, insurance stocks. In this context, it's a basket of dividend stocks. And so that's fine. But underneath every basket, we got to look at the ingredients, right? So it's like baking a cake. You got your eggs, flour, sugar, any other ingredients you might add in to make it a little extra special. But sometimes when the balance is a little off and you don't understand why it's off, it can lead to havoc. And so I see a lot of people get overly, for this context, I'll say lazy, right? And they'll say, I'm just going to buy an ETF, but don't understand the underlying. A lot of people are experiencing that now with ARK or ARKK, which I don't have a problem with, but you have to understand that if it's so heavily weighted in Tesla, it's going to be some issues. All right. So that's why you're seeing it. Okay, so you're asking about suspended dividends. Okay, so suspended dividends means that the board of directors of a company is saying that right now is not a good time to issue out a dividend. Same thing when we get paid, right? We're trying to figure out who to pay and who not to pay, how we can keep as much money in our pocket to make sure our households continue to run right. And so you might get your check, and let's say it's $1,000. You got a $300 electric bill. You got to pay your rent. Let's say that's another $500 for the week, and you're adding it all up for the final payment for the month. And you're like, well, who do I get paid or who doesn't get paid? And so it's the same thing. It's kind of the same process. I'm oversimplifying, but it's the same process when people suspend their dividend. They say we're not going to pay out any money because we want to keep that money home because we don't know what's going to happen and we got some bills to pay and we want to stay afloat. Mark Daniels is in the building, my other Wichita Connect. How you doing, sir? How was everything? All right, so I wanted to talk about this real quick before we get back into the dividend. So I want everybody to get their list, start doing their research, plug it into their list before we get back to it. All right, the Suez Canal is still clogged up. Some of y'all are probably like, what in the world is the Suez Canal? So the Suez Canal is a big old river, right? It's a man-made river that ships connect through or go through or passes through when they're coming from Asia. And instead of traveling around Africa, they go through this canal that borders between Israel and Egypt. And so as they go through that canal, it lets them out into the Mediterranean Sea so they can connect to the Atlantic and make distribution. So about 12% of the world's sea trades are going through the Suez Canal. It's a big deal. So there's like this 220-ton mega ship that's blocking the canal, and it's slowing traffic up for everybody because no one can get past. Now they're expecting that is going to get cleaned up today. Hopefully, they said some of the ship's rudders are working. Some of the mechanics are working fine. They just got to unlodge it. Still not sure how it got clogged or or turned around in the first place, because like this thing has mad traffic every day. So I don't know what happened. I don't know if somebody was drinking and sailing or what was going on, but it's stuck. But that's a major thing when we talk about the global economy. Listen, the days of just thinking about your backyard or your nation or your country, it's over. We got to think globally, y'all. We got to be global. So we got to pay attention to what's going on. So that's one thing. If that continues, it can delay things. Like we're already seeing shortages in chips and computer chips, not potato chips, but we're seeing shortages in a lot of things. And so that could really exacerbate a lot of the shortages that are already going on. Because then if they can't go through the Suez canals, then they have to travel around Africa to get to the Atlantic and then make some of their deliveries. So it could be a real issue. All right. Other thing I wanted to talk about before we get back to our dividend stocks was GameStop. Everybody was happy about GameStop. GameStop actually saw a bounce. But guess what? GameStop announced their earnings the other day, and people were kind of disappointed. And then some of the participants in the GameStop cult brought it back up and pushed it back up yesterday. I think GameStop closed out at like $190, bouncing almost 50%. They love that stock, but guess what? Company's still losing money. It had a net loss. So they lost $215 million last quarter. And for the last 5 quarters, 6 quarters, I think, they've been losing money. So that tells me that they're not really they're not really well run, in my opinion. But they still got about $600 million in cash. So they still have some cash. Now, to be fair and to be objective, because in investing, we should always strive to be objective. All right. You have to be able to see multiple angles on a thing, right? Not just invest in it because they got great colors in their logo. We want to be able to look beneath that and say, oh, what's going on here? It's good for this, but it might be bad for that. So in investing, sometimes you got to be able to hold 2 ideas at the same time. All right. So GameStop also just cleaned house. So they just fired a bunch of people, or They resigned and they just hired new people to come bring them on. So maybe they'll be able to turn this around and do some things. Also, their e-commerce is starting to pick up a little bit more. So maybe GameStop can be a turnaround story. But for me, I'm cool. I don't want no parts of it. Too many zealots, too many Jim Jones type people are following it, and I don't drink the red Kool-Aid, so I want to stay away from it. I want to stay away from it. All right, so back to the dividends. So as I was reading this article, again, this, like I said, I think the dividend gods inspired this because I put that post up and then I came down and I saw my paper here. Dividends brought up a lot of good points, right? Because there are a lot of people who are dividend stock or dividend investing zealots, right? There's a cult for everything on the market. And so many times, many people only are interested in dividend stocks. And listen, that's cool. That's fine. However, a lot of times people say, oh, this pays an 8% dividend or a 10% dividend. And they don't understand what's actually in that dividend or why people are even buying that stock or not buying that stock. And then they'll just buy it because it pays a great dividend. And so that can be really dangerous. So that's one thing you want to be careful of. A lot of the quote unquote talking heads, stock market talking heads will say, a dividend above 4 or 5% is probably dangerous. And the reason being is because usually the dividend gets that high because of stock drop, because there's a relationship between dividend yield and stock price. All right. So if you want to figure out what the dividend yield is, you take the stock price, and we'll illustrate this for one of them. We'll take the stock price and then you divide it by the overall dividend paid per share. And that'll give you the dividend yield. So if the top line, if anybody remembers their division, I know a lot of us were like, they were in school and they were like, why do I need to learn division in school? I'm never going to use this. Just like a lot of other math and sciences, but now we're seeing we actually need those subjects. If the top number goes down, it affects everything, right? So if your stock price goes down, it makes the dividend appear to be more sexy oftentimes. So let's say you have $110 stock, right? And you got a $10 dividend. If the stock falls by $10, and just goes to $10, to $100, so you got $100 divided by $10. What is that? That's a 10% yield. Where before it might have been like 9%, right? So then you'll see some of those trade off, and you'll see some of those be affected. So you got to be careful about that. You need to understand the mechanics behind that so you don't get caught up in what I like to call the dividend trap. All right, so let's pull this back up on the screen. Now, I know a lot of times I talk about yahoo.finance.com, going there first. But and I've talked about this a little bit before, another tool out here in these interwebs is finance.google.com. And so today, just for illustration purposes, I wanted to show you all the stocks. So I just threw them into a Google portfolio, which everybody can have because most of us have Gmail. I don't know where my Yahoo Mail, my Ymail account is anymore, so that's why I don't use it. But you can use Gmail just as well, or Google's Finance just as easily also. All right. So here again, I have them all. Let's see here. I believe I can also... So you could also sort by change and price and the money. So yesterday Con Ed made money. Let me change that around, because then you could also change from ascending to descending. All right, so IBM made $3.31 yesterday, Johnson & Johnson. So just illustrating the power of this tool. It's going to be very, very good. Very, very good. Now, one of the things that I like about this, though, is that once you put everything in, then it'll start showing news stories of everything in the portfolio. So I would encourage all of you, for any of your portfolios, If your brokerage account doesn't do it, or if the brokerage account doesn't really show it and really effective, just create a Google Finance watch list for yourself, and it'll be pretty cool. It'll be pretty easy. Hey Judy, how you doing? Miss J25, how are you? Doing Kim, how are you? What's up, Rod? How you doing? And Quet, how are you? How are you? Welcome. So again, that's just a quick and easy way that you can monitor it. It'll pull up all the news articles around it, or your latest news articles around it. And so when I go into here, I'm looking at this. So Germany, right? Germany expects first delivery of J&J COVID-19 shot mid-April. That's probably a good thing for Johnson & Johnson stock, right? AT&T stock forges entry point as investors mull fiber broadband build out, right? So we're talking about 5G. AT&T is going to be a major player in 5G, just like Verizon. All right, Verizon communication stock rises Friday, still underperforms market. So sometimes, that headline is just telling you that Verizon's here is not doing as good as the overall stock market, but it had a good day. Saying the same thing about Procter & Gamble. But here's the thing. When you're a dividend investor, as I look at this, we don't really want to just focus on the short term, right? So the news is cool. The news leaves clues, but the news isn't everything. Y'all know I don't really cater to traders. I can trade. I can talk the language. I can do it. But I feel that we need more investors in the market, right? Because again, my whole thing is to help create wealth in the Black community. And trading can do some of that, right? It's an income perspective of it. My thing is everybody isn't built for it. And I feel that there are more people that need investment help and understanding, because a lot of us still don't even know where to go to start to buy an investment. Y'all don't realize how many times I've answered that question. And I'll keep answering. It's not a problem, but it just goes to show that, there's still help. There's still help. So we need to think baby steps and not trying to be run sprints around here. All right. So again, as we go through and we look at this, it gives us, a good quick snapshot to some of the stories that are being talked about in this. And then even when you go down to the bottom, it'll give you some suggestions of other stocks that you might be invested in. Like I would be invested in Intel, Google, or Alphabet, Verizon, Johnson & Johnson, Visa. Not interested in Snap. Definitely not interested in GameStop. And I'm a little interested in Carnival. Definitely interested in Square, Nike. Not interested in AMC. Why am I not interested? Even though AMC is trailing GameStop, because again, they got the cult members that are following it. They don't make any money. So from a long-term perspective, it's not a good look for me. Not a good look for me. But back to dividend stocks. All right. So as we go through and we look at all of these stocks, we can start going down into each one of them. All right. And so here I am looking at IBM. So IBM right now is trading at $136.38. That's one of the stocks on the list. What does IBM have? How does IBM make money? Do we think IBM will continue to make money? I think so. Even though IBM is kind of like a sleeping giant, I think they will continue to make money. But again, scroll down, we'll look at this. We can see the year range. It's ranged from $104 to $136. So right now it's close to the top of its range. By the way, stock market closed again at another all-time high. Forgot to mention that earlier. Figured I'd throw it in today. Or throw it in now, rather. I don't know how many more all-time highs we're going to get. Again, I am expecting a little bit of a correction at some point. A little bit of a correction. But that correction does not mean we stop investing. All right, so it talks about the PE ratio. Jose and Alton love to talk about the PE ratio. Again, that's the price to earnings ratio. IBM's at 21. IBM's a profitable company. When you look at some of these other tech companies that have PE ratios of like I don't know, 900, 1,000 that aren't profitable. It makes you wondering, what does PE ratio measure? This measures if the company is a good buy. Is it overvalued or is it undervalued? Again, the top line is the price of the stock. The E stands for earnings per share. So you take the price of the stock divided by earnings per share, and it will show you that. So typically the higher the stock, the higher the PE ratio, the lower the earnings. So that means that something is a bit out of whack. But now we come here and we look at dividend yield, because dividend is the theme of today. 4.78%. Now we just kind of went over that. 4.78%. All right. And y'all know how when I go into Yahoo, I talk about the profile and what they do. Same thing here. There's a whole about section here. It gives you the CEO, how many employees. All these things are, important to know. They're not always game changers, but they're important to know. So again, and they do volume over 5 million shares a day on average. But when you look at that, 4.78%. So you take your $133, you buy a share, right? On that $133, you'll get roughly 4.78%. Now, can anybody do that math real quick? 133 times. So it's about $6.30 a share. So for an exchange for your $133 buying that share, you will then get $6.33 throughout the year in dividend payments, usually paid quarterly. There are times where some stocks pay out monthly. Some of them pay out semi-annually or biannually, but normally it's quarterly. But that's one, right? So here's the question you want to ask yourself. If we're thinking about creating an income stream for retirement or financial freedom, right? So we can create money coming in so we can pay our bills when we retire, when we stop working, when we stop having an active income or an active check coming into the household. That might be something you want to think about. And then you can say, you know what, every time I get paid, I'm going to put $100 in the IBM. Again, this is not a recommendation to buy or sell IBM. We are just having a wealthy conversation, people. That's it. That's all. No more, no less. All right. Same thing goes for Johnson & Johnson. Same thing. Procter & Gamble. Now, in the interest of time, because I can't hang out with y'all all day, y'all tell me a couple, 2 or 3 that y'all want to go through, and we can talk about them. But again, as we go through these and we look at them, right, think about them in terms of income. What can pay income? Will these companies be here 5, 10, 15, 20 years from now? What's the likelihood that they'll survive to be able to pay you a dividend? Now, while y'all put that in the chat, what stocks y'all want to go through, y'all want to run through. But as we think about that, right, I want to share a story, and I've shared this story before. Part of the reason why I've been always so interested in the stock market, and I didn't realize it until I got older, was because I would always see my dad getting dividend checks. He didn't reinvest them, no, right? Now, my dad was an accountant, one of the first Black accountants in the city. And he understood money, understands money, understands the value of money. He knows how to stretch a dollar, but he didn't necessarily understand all the fundamentals of the stock market nor dividend stocks. So he brought General Dynamic. Again, this is just an example. He brought General Dynamic. General Dynamic is a defense stock. He was in the Navy, and he figured it'd be around for a while. And I think maybe a stockbroker gave him a recommendation. But he brought it. He would get these dividend checks every quarter. And I would really be fascinated. Now, you'll probably never see a dividend check mailed out ever again, or it'll be really few and far in between. But again, I was fascinated by it. And he would just take those checks and put them in his account and just let the money pile up. And I'm not mad at that either. But I said to him once I really started to understand the market, I said that, you could have reinvested all those checks back into the company. And then because you had it since like the early 80s, late 70s, somewhere around there, you would be caked up right now. You have a whole lot more money. But he didn't know, and he can't be mad. But, it is what it is. But I'm appreciative of it because, again, I got to see it. It added to my overall stimuli and my curiosity of why is he always getting these checks? Like, what part of the game is that? And that's part of the reason why I always tell folks to talk about money with your children. That's part of the reason why I always tell folks to, instead of buying your children BS junk, toys, trendy clothing. By the way, kids need clothes, y'all. I'm not saying that to buy kids clothes. Buy some stock. Give them the gift that keeps on giving. And just imagine if you buy a dividend stock and you have the dividends for those stocks reinvested. What kind of legacy would you be leaving to them in 10, 20, 30 years? Could be something to behold. Okay, Judy. So Judy gets dividend checks with Tiffany's. Okay. I'm not sure. They were supposed to get brought out by Louis V. I know they were having some problems with that deal. I'm not sure if it ever happened. Well, Judy, today we could talk about the REIT that is on the list, which is SL Green Realty. I'll come back and I'll do another either video or episode on REITs and some of my favorites. I try to get away from actually recommending things only because I don't want to confuse people, right? I really want everybody to do their homework, but I can drop some breadcrumbs. I can give some clues. Because listen, y'all got to be able to do this work on your own, right? One of the things that used to infuriate me when I was a child was when the teacher would say, well, I got mine, you got to get yours. And I used to think that was such a crazy thing to say. And it is. But when you think about it, it's true. Your job is to get yours, is to get your education. So you can go ahead and be able to be self-sustaining later on. God bless the child who has his own. All right, so I don't see any comments in the chat. What stock do y'all want me to go through? Or do y'all want me to just pick on my own? Nobody has any ideas? Nobody has any ideas? No thoughts about this? All right, so I'm going to talk about AT&T because I own some AT&T. I'm working on getting my lot in AT&T, and a lot is 100 shares of AT&T. If y'all have any other ones or any other recommendations, put them in the chat. Come on, y'all. Y'all acting shy today. What's up with y'all? I don't know what that's about. All right, so AT&T is at $30.31. I'm doing good so far. Thank you. Hey, Mr. Wallace, how are you? All right, so AT&T, $30.31. All right, it closed up 23 cents the other day, was up a little under a percentage point for the day. So here's the chart, just using Google. Started at the beginning of the year at $29.44, and it is now at $30.31. So it's up, but it is lagging the overall market. All right, it's not doing super duper good versus the market. Now, we're talking about dividends. How much is AT&T's dividend? 6.86%. So it's a $30 stock paying a 6.86% dividend. Oh, and hey, here is an article from Seeking Alpha. By the way, I've been published on Seeking Alpha many, many years ago. But a 52 cent dividend. So 52 cents. So every shareholder with one dividend, every shareholder with one stock gets 52 cents. That's not bad. But again, you see all these other things that'll kind of give you a clue about what's going on with the company. Now, actually, I want to switch gears here for a minute because while I do like the Googles, it doesn't give me as much information as the Yahoos. Oh, well, wait a minute. So here's some of the financial performance. So in Q4, we had revenues of $45 billion. We had a net loss of $13.8 billion. Now, that could be a sign that maybe they won't be able to keep that dividend going. So one of the things we want to think about is this a short-term anomaly, a short-term anomaly, or is this an actual trend? All right. But they have almost $10 billion cash on hand. So when we see here cash on hand, y'all know I always love to talk about the cash. They can afford to keep the dividend going. Now they may change their mind, but again, this is one of the things you want to think about. So how does AT&T make money? Cell phones, entertainment. They brought a bunch of cable operators. They brought Dish. I know they're having a hard time with Dish, but and they're planning on selling that, and Dish isn't doing that great. But it's definitely something to think about, right? Again, understanding how a company makes money is vital. Because again, if you go back to the question I asked earlier about your dividend stock portfolio, each one of the stocks in that portfolio, will it be around 5 years from now, 10 years from now, 20 years from now? I don't have a problem with buy and hold. What I do have a problem with is buying and holding without any surveillance, without any study, without any observance. That's never a good thing, right? Yeah, Gloria, I hate penny stocks. Penny stocks suck. Penny stocks are the spawns of the devil. Just to give you more background on that. Gloria, I thought we talked about that before. But all right, I'm not going to go off on a tangent. I usually go off on a tangent. Everybody's interested in penny stocks because they're cheap. They're worried about the price of the stock. Number one, price of stock doesn't matter anymore because we can all do fractional investing. All right, that's number one. Number two, penny stocks are highly susceptible to market manipulation. Again, penny stocks are highly susceptible to manipulation. So when you look at GameStop, so many people feel that GameStop was manipulated. We could debate that, but I would lean and say that it's manipulated-esque, right? But basically, you have a bunch of people that have coordinated to pump up the price of the stock. That happens all the time in penny stocks. So you can make a lot of money in penny stocks, and you could lose your shirt, your hat, your panties, and your drawers in penny stocks too. And so for beginners, I tell people to avoid penny stocks at all costs. Avoid them. And basically, thank you for saying that. I didn't know you paying attention. One Nith, I think that's how you say your name. How are you? 0529, how are you? Elizabeth, how are you? Miss Ohio, how are you? You listen. All right, that's what's up. So, all right, I'm going to switch lanes real quick, though, folks. I want to go to what I always say you got to go to, which is finance.yahoo.com, only because I can navigate it a little bit better. But, just for a real quick analysis, I don't have a problem with finance.google.com now. All right, so I'm just going to show you this real quick. So again, $30.31 stock closed out, right? So here, it tells me the stock yield or the dividend yield, which is 6.9%. It also tells me how much it's paid per stock. So it's $2.08. So $2.08 is what you get per share throughout the whole year. All right. So if you have one share of AT&T stock, you'll likely get $2.08 per share in dividends throughout the year. So what else can you take put $30 into and get $2 back every year, typically? Anybody got anything? Not much. So we're doing what's on the list. We're doing what's on the list, y'all. So y'all forgot what's on the list that quick? Man, y'all got slow attention spans, or either I'm not holding y'all attention. So is it my fault or is it your fault? All right, so real quick, I want to look at the profile real quick. All right, so AT&T, all right, provides telecommunication, media, and technology services worldwide. The company operates through communications, Warner Media, right? So remember we talked about the cable company they brought, and Latin American segments. The communication segment offers wireless voice and data communication services, video and targeted advertising services, broadband, including fiber, legacy telephony, internet, and voice communication, and wireline telecom services. Wireline is that old school phone we used to have back in the day. I don't think anybody has any of those. I actually want to get one. It's been a hard time. Usually, anytime when there's a disaster, your cell phone might go up, but your wireline will not. All right, we saw that in 9/11. It also sells handsets, wirelessly enabled computers, wireless data cards, and IP-based set-top boxes, as well as various accessories such as carrying cases and handhelds, right? So it also operates cable networks, video on demand streaming platforms under the HBO Max and HBO Go names. All right, so they own HBO and Cinemax and a bunch of other digital properties. All right, so let's see here. So I find that interesting, especially as the content wars start to rev up. Again, we already know they have about $10 billion in cash, so we don't need to go through that. So then, you ask yourself again, how is this company positioned? How will they run? What are they looking for? What are their strengths? What are their weaknesses? Right. So we know AT&T has a lot of debt. However, AT&T is also positioned to take advantage of 5G. So 5G is going to be a game stopper. Supposedly. That's what the internets are saying. The internets, not the internets, but the internets. All right, so it's going to be interesting. It's going to be interesting. All right, so Michelle said ExxonMobil, Don said Colgate. Y'all just like off the list. All right, so Jose said he is chasing a lot in Coke. All right, so basically what he says is chasing a lot. He's trying to get 100 shares in Coke. All right, so a lot, not a lot, like a lot, but a lot in stock market terms is 100 shares. So you have round lots and you have even lots. Even lot will be 100 shares, or excuse me, a round lot will be, I'm messing this up, y'all. A round lot is 100 shares. And when you don't have a lot, it's what is it? Is it an uneven lot? I need to look that up. I haven't looked at that in a while. Curtis Davis, how are you? Okay, I believe you're tagging people in. Thank you for that. Listen, Shay Hill's being a great rebel citizen, y'all. Great role model. Tag some people in. Share this out with some folks. Listen, we do this every Saturday at noon. We have a wealthy conversation every week, right? It's time for us to elevate and motivate, y'all. Move up to the next level of things. And not just chase after the fads, but actually go after creating wealth for you, yourself, and your family in a real systematic and scientific fashion. All right, so Curtis says facts. I debated somebody on FB about AMC's debt. Why not to buy? Yeah. I'm not debating anymore, y'all. Because I am a person who I do love a great conversation. I do. However, I see some people say some things, and it's just like, you really aren't studying. So young kid, and he called himself a young millennial, because I love my millennials too. Some of them are a little feisty though. A lot of them don't listen. And it's cool. I get it. A lot of times when we're younger, we don't listen. So, but I'm not the guy to say all millennials are trash, because in every generation you'll find trash people. But someone said to me that the old school method of evaluating stocks doesn't matter anymore. And I'm like, what? I'm like, all right, clearly you're only caught up in this chasm of time, this little snapshot of time. But if you go back and you look at all the ebbs and flows of the markets, all the booms and busts, you'll see a lot of the same characteristics. People get excited, people get ecstatic, market runs, right? And this is all about dividends too, y'all. This all plays into parts. So I'm not just ranting just for the sake of ranting. The stocks run, people get scared, something happens. We have a bunch of Suez Canal blockages. Maybe we have a war somewhere. Maybe we have a bunch of people who are super hype about real estate, and then they create these funky products that crash the market because everybody got too greedy. Something always happens. It's not always the same thing, but something always happens. Go back and look up the tulip crisis, and then look at 1929, and then look at 73, and then look at Black Monday in 87. Look at like all these dates. Look at all these times. Like you see rhyme or reason. However, the one thing that's constant over those times is all of those things were kind of short-term blips. The stock market usually continues to rise. We may have some flat years or even some down years, but in the long haul, it continues to rise. So if we're thinking about dividend stocks, again, keep it in the context of dividend stocks, right? We should already be thinking long term. It's not a get rich quick thing, y'all. It's not wake up today, we balling tomorrow, we buying Lambos and playing on a yacht. That's just not it. That's not it anyway, but especially for this. If you're thinking about creating another income stream, another passive stream, you could take, $25 here, $50 there, invest it into a stock or an ETF that focuses on dividends and create a whole nother income stream for yourself. And then what you do with that income stream, you take that money and reinvest it back into the investments to make an even bigger income stream. That's how you make your money work for you, right? That's how you escape poverty or generational poverty, right? We all talk about generational wealth. Nobody ever talks about generational poverty. Nobody ever talks about the elephant in the room, right? We know systemic racism is real. We saw that with redlining. We see that with the educational system. We see that with black codes. We see that with the war against black folks or the quote unquote war on drugs. We see it. However, what we never really talk about is missing out on some of those opportunities that we have. A lot of these companies, they have many mastermind groups run them or mastermind groups run them. You mean to tell me there are no masterminds in the black community that can take $1 a week, $5 a week, put it together and pull it and then build something? I don't care if it's a fruit cart. I don't care if it's a stand to sell water. I don't care if it's to invest in a young entrepreneur making clothes like a FUBU, like a Damon John. Nobody's there. Y'all mean to tell me that there's not enough people that can do that? Now, I'm going off on another tangent. That's where it led me to. But what I'm saying is that when you start to think long term and when you start to think about all the tools that you have at your fingertips, you can do a lot of things. And so creating, again, another income stream and using that income stream to build up an asset base for you is another one of those tools that we all can leverage and we all could use. All right. So Curtis says, stop buying penny stocks as newbies. Yes, please stop. Again, I don't have a problem with anybody doing anything. Just learn the basics first. So Curtis says, should I complete my lot and forward? I can't tell you that. Nothing here. I'm not making any investment recommendations. Not telling you to buy it or sell it. I'm telling you what I do. And yes, I have a lot and forward, but I can't tell you to do that. Everybody's situation is different. You have what makes me so mad. You got all these goofy people running around on social media, acting like they're gurus, right? Acting like they have the cheat code and they got all the pills for everybody to take, like it's a shortcut, but there's not. There's no shortcut. What works for me may not work for you. What works for you may not work for me. There could be a whole penny stock investor genius here, right? This is what I was talking about earlier when I said to be objective. You got to be able to hold multiple thoughts in your head at the same time that might be opposing. That doesn't mean you waver or you can't make a decision. That means you're just a thinker. A lot of times we get that confused because a person can see multiple viewpoints. And we say, oh, they can never make a decision. Oh, they don't know what they're doing. No, that just means they think about things and they think about multiple angles. What's a strategist? What does a strategist do? But at any rate, just to make my point, there could be somebody on here that could be really great and really in tune with penny stocks. Make a killing on it. I wouldn't have a problem with it, right? Because they spent the time, the due diligence, they worked hard, right? Like if you want to do any of this and you don't want to work hard, just bag it up. Just go on because you're not serious. And I'm not talking about like with our ancestors, that kind of work. I'm talking about like thinking work. Maybe being frustrated and working through that frustration. Those things can be hard at times. That's why a lot of times people quit. That's why a lot of people don't want to think, because it gets hard. Because sometimes you got to deal with your thoughts. And sometimes some of those thoughts that come into your mind are kind of creepy, kind of weird. That's why everything ain't for every outside consumption. That's what I believe. That's what I believe. Good and Plenty Rennie is here with us. All right, so Basie Nunn says she wants me to do Con Edison. All right, we can definitely check out Con Edison. Aniska, I hope I'm saying your name right. My bad if I'm saying it wrong. Tiny Tooth Doc. What does a Tiny Tooth Doc do? That's funny. So is that like a children's dentist? That's funny. Yes, this is educational, not advertisement. No, yes. Yes. Now listen, if I'm advertising something, I will let y'all know, but 99.99% of my stuff is going to be educational, always. All right, so before we go to Con Edison, I wanted to read Jose's comment. So Jose says 120 shares of Coke, or KO, which is the ticker symbol for Coke, so long as it stays in its range of 48 to 52, will mean as an investor will earn a dividend equivalent to 1 share purchase every quarter. Oh, so basically Jose done did the math, right? So he's figured out if he's got 120 shares of Coke, right? Anywhere between trading in the stocks trading, anywhere between $48 and $52, all the money that's coming in from the dividends will buy another share of Coke. So, right, so if we got 120, so that means at the end of a year, we're going to go through 4 quarters because Coke pays a dividend 4 times. That means it's going to have, or he will have, 124 shares by the end of the year. And then the next year, on and on and on again. And just see how that adds up. Jose is definitely over there thinking of a master plan. I like that, Jose. All right, Curtis says he bought more Apple at 120. I ain't mad at that. All right, so Con Edison, or Consolidated Edison. All right, let me pull that up. Con Ed. So Consolidated Edison, or Con Ed, ticker symbol ED. Let me put that up on the screen for y'all. Can everybody see that? Put a yes in the comments for me, please. Detroit CEO, how are you? Thank you for joining us. Or do I need to make it bigger? But let me know if you can see that. Just put a yes in the chat. All right, Consolidated Edison trading at $74.44. Again, $74.44. It's a $25.4 billion company. All right, so it's not a penny stock. All right, by the way, penny stock is any stock that trades below $5 or less. It's not actual pennies. $5 or less. All right. PE ratio of 22.7. Not bad. All right. So it pays a dividend of $3.10 per share. That's for the whole year. Now those payments are broken up quarterly, but again, for the whole year is $3.10. K-Marie 08, how are you? Welcome, welcome, welcome. All right, so y'all can see it. All right, so I apologize to my IG people who can't see the screen that's showing on my YouTube feed, my Facebook feed. Maybe one day the technology will allow me to do that. All right, but again, the dividend yield is $4. Excuse me, dividend yield is 4.16%. So if you take that $3.10 and divide it by 74, you'll get roughly 4%. Okay. So Con Edison, again, it's a utility. They provide, let's go to the profile. They provide Con Edison through its subsidiaries engages in the regulated electric, gas, and steam delivery business in the United States. The company offers electric services to approximately 3.5 million customers in the New York City and Westchester County. So Westchester County is right above New York, y'all. All right, gas to approximately 1.1 million customers in Manhattan, the Bronx, parts of Queens in Westchester County, and steam to approximately 1.57 customers in the parts of Manhattan. It also supplies electricity to approximately 0.3 million. So that's roughly a quarter million customers in Southeast New Jersey and Northern New Jersey. Excuse me, Southeastern New York and Northern New Jersey, and gas to approximately 100,000 customers in Southeastern New York. So here's the question. 3.5 million people. Is anybody going to stop paying their gas bill? Or are there enough people that are going to stop paying their gas and electric bill to drive Con Ed out of business? What do y'all think about that? What do y'all think about that? I would say no. I would say most of the people are going to pay their gas bills, or there'll be some kind of subsidy in place, meaning that Con Ed's going to be around for a while, a long while. It's in like the biggest city in the United States. It's in the money center of the world. So what do you think about Con Ed? What do y'all think about Con Ed? Put it in the chat. Again, at a 4% dividend. Now, this stock is probably going to be boring. Again, it's not going to be a high flyer like Tesla, like GameStop, like AMC. But guess what? Guess what? They make money. This company makes money. They actually make real money. They make the money that folds and not jingles. Shout out to Coming to America for any of my film fans over there, out here. So they do about $12 billion a year in sales or in revenue. And usually utilities pay out a lot of their stuff in their overall costs. They usually have high costs, but they have a profit. They have a profit of about $1 billion for the year. And then that $1 billion will then get paid out to shareholders. Now, again, it's not sexy. It's not going to do the Cupid shuffle. This stock is here just to do the two-step. And if you can think along those lines, right, all you need to have fun at the party is a good old two-step. You don't got to start breakdancing and pop locking. You ain't got to drop it like it's hot. Good old two-step, get you through. All right, now the stock started at the beginning of the year at $70.66, and it is now $74.44. So again, that's actually not bad, but the market is up about, keeping track with the market overall. Market's up about 5, almost 6%. So 4 divided in 7, it's about 4% up for the year, somewhere around there, 4 or 5%. So it's not bad. All right, so DC, how are you? Welcome, welcome, welcome. Says hello. Good afternoon, brother. I have a question for you. I have a $15K emergency fund for 6 months. Now I want to stop savings and emergencies funds and build a secondary emergency that grow. All right, so first and foremost, we don't call them emergency funds no more. They are opportunity funds. Why do I call them opportunity funds? Because these opportunity funds help you survive emergencies. And When you're able to survive the emergency, you're able to take advantage of opportunities, and the opportunities are the ones that take you to the land of milk and honey. Basically, the opportunity fund will help you get to the land of wealth. All right. So yeah, but I got you. That's just my thing. And I think that's a good idea. I tell everybody, I think you should have a year's worth of cash in the bank in your opportunity / emergency funds. A lot of y'all clown me for that pre-COVID. Then COVID hit. And y'all like, oh shit, it would be great to have a year's worth of cash in the bank. I've been around, y'all. This ain't my first time at the rodeo. I don't say stuff just because I'm just saying it. Like there's always some rationale. And that's not an egotistical statement. I'm just saying I've been around. This is from experience, not from ego. But I think that's a good idea. And listen, you could stagger out or partition out your opportunity fund. And so you could have one that's strictly for just in case the roof falls in. And then you could say, all right, I'm cool with that. I want to have a fund that's there that I want to be a little bit more risky with, but I'm not trying to do the Watusi shuffle. I'm just trying to two-step with a little bit more bounce to the ounce, but still stay in that groove. But again, not trying to get too fancy, not trying to get dirty. I actually did a show on risk reward and asset mix. And I kind of stepped out how you should be thinking about investing for your assets. Meaning, right, cash is the base. If you think about a pyramid, cash is the base of that pyramid. That's the foundation, right? Can't really do anything without a strong foundation. At the next level, you may have real estate or stocks. Then at the next level, you may have let's say, I'm trying to think, commodities might be at the next level. And usually at the top of that would be things like more riskier things. Again, commodities, futures, things like that. I would probably put crypto at the top of that pyramid now, just because of the volatility in crypto. So, again, you just got to look at it that way. And again, I said this earlier, everybody's situation is going to be different. I see some of these gurus that everybody loves to follow. All y'all love to follow, give trash advice and say, well, I did this worked for me, so you go do it too. Okay. I guess if with Shaq playing ball, he could give Muggsy Bogues the same advice, right? For any of my basketball people that's out here. Two basketball players, two totally different body shapes, right? Two sets of gifts. Plays two different positions. So again, you got to do what's right for you. You got to do what's best for you. All right. But I like that DC though. I do. Savings, y'all. Savings, I'll be honest. I talk a lot about the stock market. I'm talking about dividend stocks. But if y'all can learn how to save from a community standpoint, that would solve probably 90% of the problems we got. Because one, y'all will stop overspending on stuff you don't need, stuff you don't like, to impress people that don't give two hootenannies about y'all. And then you would have the money there and available to do things that you need to do. All right, Jose likes Con Ed. All right, cool. He says he likes Con Ed as a company, hate as a utility that he has to pay. Yeah, listen, there's no free lunch, man. There's no free lunch. All right, Con Ed is a good buy. That's what Curtis said. That's not what I said. I don't give buy or sell recommendations here. Everything is here for investment purposes. Listen, before you buy or sell any investment, please speak to your investment advisor and or tax advisor so they can let you know. Don't forget, past performance is not an indicator of future results. You can have a stock that's doing great for the last 5 years, and that will do terrible for the next 10 years. There are no guarantees. Please believe, please remember that. All right. Curtis says many people think stocks are dead because most people's 401k is underperforming. Yeah, but most people don't understand underperforming. And again, too many of us are listening to these goofy ass social media nincompoops out here that tell y'all that 401k suck. Everybody I see say that is one, not an advisor. Two, doesn't have the education. Three, doesn't have the experience to even talk about it. They ain't qualified to talk about it. Oh man, I wrote down something the other day. I was having a conversation, which brings me to this. Okay, here's the question. And I'll probably do this as a video, but I want to get y'all's take on this. Why do people put so much trust in people who are not qualified, then get upset when they do something that shows they are not qualified? Anybody guess why I wrote that and what inspired that? I mean, y'all saw it this week. I'm going to read it again. So now I'm getting excited. I'm having a little bit too much fun. All right, so it says, why do people put so much trust in people who are not qualified, then get upset when they do something that shows that they are not qualified? Like, where they do that at? Like, who raised y'all? But listen, we like it. And listen, if you like it, I love it. But most times, y'all going to be coming running back to me and say, Kamar, your stuff's boring, but you be right. It's because it's not a fashion show. It's real life. What's up, Kelly? How you doing? No, Kevin. I say a year's worth of income. That's what I say. I say a year's worth of income. And the reason I say a year's worth, so listen, everything I say, y'all, is levels, right? So let's don't get so caught up with the actual factuals, because I know some people will say, well, some people say expenses, some people say revenue. First things first, get $1,000 in your savings, right? The end goal, though, to me, you should have you should have a year's worth of revenue, a year's worth of income in the bank. That'll give you ultimate freedom. Talk about FU money. When your boss complains and you don't want to work there no more, you want to do something else, that's going to give you security and freedom like you've ever seen. But going back to Kevin's question, he said a year's worth of expenses. So let's say you get the $1,000 in your savings account first, right? This isn't $1,000 that you need. It doesn't need to be messed up with your bills, right? You just got it. It's saved. It's set to the side. Then yeah, you can get a year's worth of expenses, but let's start with a month. Let's get a month's worth of expenses. All right. Let's get 6 months worth of expenses. Let's get a year of expenses in the bank. Let's get it set to the side in cash. And I know some people hate this. Some people will call me dumb over this. But the people that do it, they thank me because it gives them peace of mind. Nobody ever factors in peace of mind in this whole thing of getting rich or / wealthy, right? But get that in the bank. Get that in the bank. Then we can come back and we can work on getting a year's worth of income in the bank, right? So it's levels to it. And all the while, you could be taking your bonus money, your tax refunds, y'all stimmy. Everybody that got stimmy, set it up. Crabs are out of stock at a lot of places. I know y'all saw I made a lot of jokes about that, but it's here. Somebody was telling me about a conversation he had with a server at Capitol Grill. And they said they haven't seen that many black folks in Capitol Grill ever. And this is another black server. They're taking their stimmy and they're going out to eat. There's another new restaurant here in Philadelphia a friend of mine went to. Says filled wall to wall black folks. And this is a place that charges about $100 an entree. Steakhouse in Philly, new steakhouse. Stimmy, tax refund. All that money that we waste on doing nonsense could have went to savings. So when a thing like COVID happens, you ain't got to be running out buying up all the goddamn toilet paper. You'll be cool. But, nobody wants to talk about that. That ain't fun. Okay, so this is educational, not advertisement. And then this is, you said it's boring? It's boring? PW Wills 01, how are you? Hammond Properties, how are you? Now she has 3. How are you? Welcome, welcome, welcome. Amber Styles Cuts, how are you? Happy Saturday to everybody. Christine Poor, how are you? Welcome, 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 folks. All right, so I've been on for a minute. I've been on for like an hour and a half. So we went through a couple stocks. We talked about dividends. We talked about the power of dividend stocks and the power of dividend stocks in creating a safe and secure retirement, right? Even Jose came through and gave us an example of how you can take your dividends, reinvest, get more shares that will eventually build your wealth. So again, just think about this, y'all, as we are going into this crazy world of stocks. It seems like the market's never going to slow down. This bull market is here to stay. That's what some people think, right? There's going to come an opportunity when the markets pull back. And when the markets pull back, if you have cash, you can take advantage. You can go on a shopping spree. So, take your time, keep investing, keep some cash, be ready to strike if you see a pullback. It's coming. It's coming. All right. So last 5 minutes or so, any other questions before I go? Because now I'm hungry. I was hungry. All right. So let me get into a couple of these comments. Sexy versus boring. All right. The issue nobody on YouTube talks about track record or previous holdings. Yeah, a lot of people don't talk about previous holdings. Listen, if somebody tells you that they've never lost on a stock, run. They're lying. They're lying. All right, so Adrian said, I wish I had that kind of money saved up. I quit my job on Monday. But see, that just shows something, right? When I talk about that FU money, AKA the fuck you money, it's like when you practice enough discipline, and again, everybody's situation is different, right? So I'm not trying to put anybody down. But a lot of us, again, have money. The fact that crab legs are sold out shows that we have money. We don't have the priority of our money straight, but we have money. And so if we can get to the point where you have that kind of money and you can say on Monday that you would quit, that shows that you really don't like your job. So to me, that's Adrian's telling me she really doesn't like her job. And Adrian rocks with me, so she knows I'm not talking about her personally, right? But that shows something. So where's the real freedom? There's really freedom in discipline. It can lead to freedom. And listen, I'm still in the Fat Boy Club. So my discipline ain't perfect on a lot of things. So again, I'm not here being judgmental. I'm just saying that, listen, if we start to save our bread, we could have a whole lot more freedom. We can do a whole lot more things that we really want to do. Life's short, y'all. Life's short. All right, so he says, no, that was about the 4% return was boring. You drop a science, bro. Okay. Yeah, tax on gains is real. Tax on gains is definitely real. So again, be honest with yourselves. What do you want to be when you grow up? And that's not a job. It's like, what do you want to be? You want to be free? Do you want to spend time with your children? Do you want to just play games? And when I say games, I don't mean like board games. I don't mean like, I'm talking about like exercise and basketball and like real exercise and just enjoyment, skiing, enjoying things, activities you might enjoy. Like, what do you want to do? You want to be an artist? Do you want to create arts of wonder? One of the things I want to do is, I've always kind of like, when I was a kid, I remember this. My mom would take me to her art school and I was fascinated by her light table. And so I would always trace my comics. I was a big comic book fan. And I love that. I want to get back to doing some of that and practicing some of my art. I'm also a big music lover, right? I used to DJ parties a little bit when I was a kid. So don't be surprised if you see me pop up with some DJ equipment, right? So, but just things of being free and not necessarily doing it for the look, but doing it for the enjoyment. Me and Kevin's my homie on here. We talk all the time. We say a lot of times people get on the gram and they do it for the look, right? Not for the real substance that's behind it all. We get caught up in the superficialities of things, if that's even a word, but we really don't get caught up in the true meanings of things, the impact. I don't do this to get paid. I do this to hopefully be impactful, that hopefully some of y'all can take some of the things that I've learned over the years and you can apply it to your own life. That's why I don't try to make it extra spicy and extra sexy, because this shit ain't sexy. I try to give it to you real, just being honest. Right? And I know I told you I said I was going to try to stop cussing, but I cuss. I'm just being me. And that's my business phone. So I'm guessing they're saying it's time for me to get back to work. Like work. So I got to mind the business that pays me. All right. So Curtis says, in our community, we don't know our net worth. Facts. Super facts right there. Super duper facts. We don't know our net worth. Part of it is because we don't know our history. Part of it is because we believe we're just Americans who are only slaves, because that's the narrative that's been taught in our educational system versus what we can afford in our own financial picture. Take finance out of that though, Curtis. Like, keep the money out of it. We don't understand our worth. Like, when you go back and you look at all the inventions, like the inventions that Black folks have made in this country, it's mind-boggling. You can't count the money. And they didn't do it for the money. 9 times out of 10. They did it because you could do it, because they was just that fly. Y'all know I be talking about being fresh, fly, and bold on here all the time. Our people were just like that. We got to embrace it. It's not a nationality thing. It's a us thing. Because you see Black folks do the same thing all around the world. So, yes, Macy, no judgment. Just accountability. Yeah. But sometimes people will take it, right? That's why I call these wealthy conversations. Many of us don't want to be accountable. And that doesn't mean you're perfect. I'm not perfect. I'm not your guru. I'm just a man who cares about his people or the community. That's about it. All right, Adrian. Thank you. Adrian, I feel like we here. We got a bond. We rock a couple times a week. You get me. So, all right, Curtis says, in an ideal world, you heard 1 million in stocks, but spend $90K per year. Yeah, but also in an ideal world, you have $1 million in stock. You might spend $90K a year, and you also invest another 500,000. Yeah. I want to make a positive impact, right? Because you can be having negative impact too, right? I try to be specific, not specific, with my words as well. But yeah, that's what I'm trying to do, make an impact, a positive impact. So, all right, y'all. Listen, if y'all want to get free, save your money. If you want to get free, buy assets that will grow and or throw off income, right? That's why we're talking about dividend stocks today. So again, one of the greatest tools you can utilize is the power of compounding. That is naturally implied into dividend stocks. Again, they're going to go up and down just like any other stock. They are still stocks. They are still succumb to the market forces. However, if you play it right and you prioritize, you can use them. You can use them to create a whole other income stream for yourself. You ain't got to do a whole lot of work. What I mean by that is you don't have to watch the screen all day long. If you want to watch the screen all day long, fine, you can be a trader. But this isn't the platform for that. You can, again, take some money every time you get paid and you can invest into it. There's a reason why 401ks work. 401ks work because of automatic savings. You don't have to think about it. It comes out like clockwork. It's done for you. It's automatic. That's why they work. And then you get the extra. But the first thing to do is really become a saver. If you really want to become wealthy, I'm not talking about any trust fund kids, right? For the record, most people that become wealthy were never trust fund kids. They got it from the muscle. They got it from the mud. Yeah, they might have had some help along the way. We all have help one way or another. But just looking at the dollars and cents, they got it from the muscle. Look at some of them. There's way more of them than there are trust fund kids. A whole lot more. So a lot of times we get caught up in the whole 1% thing. Listen, there's always going to be winners and losers in everything. When you look at a LeBron James or Kobe Bryant or Michael Jordan, they're not average. They're above average. They didn't want to be average either, though. So, that's the thing a lot of us don't clue into. We don't clue into the mindset. Jordan didn't want to be average. Kobe didn't want to be average. LeBron didn't want to be average. They recognize, I got something. Why just be average? Be a savage. Instead of being average, be a savage. Take it to the next level. I think all of us can be way, way above average in a lot of the things that we do. We just got to tap into it, and we got to be serious about it. And we got to recognize that it's going to take hard work, and it might be painful at times. And that's okay. But what are you willing to sacrifice? But again, to me, black excellence ain't about average. And when you really look at it, the stuff that we do is just so natural and divinely in us that we won't be average anyway. I think history shows that. Yeah, some of us will be below average. Some of us will be bums. That's cool, but that's nature. That's nature. So, all right, y'all. This is the day. This is the day that the Lord has made. Let us all be rejoiceful and go out and do some work. Save somebody. All right. And make sure you're not being wasteful of the day that the Lord has made. All right. So see y'all. Everybody have a great day. Love is love. Thank you all for being here. Always humble that you're here. Have a great day, everybody. Bye-bye.